Good day, all. Ira Epstein of Linn Associates with your agriculture update. And this is for Monday, and we're at the 11th of February, 2019, about 3:17 p.m. Central Standard Time. So what we know we're dealing with is China still. We know we're dealing with budget issues right now. And in the grain market, it was more or less follow through from what the market had done on Thursday, Friday, as we got some government reports on the grains, and you're still seeing that follow through today. Now, we're not at the point yet where I think we know what the farmer's going to do or not do. They're making plans, don't get me wrong. But a lot's going to depend, I think, on this week. If we get any form of a deal with China, farmers may switch around at the last minute. It's going to be one of these switcheroo games. In the meantime, what's been going on is the dollar is on a tear to the upside due to the uncertainty of the U.S.-China trade deal, due to the uncertainty as to what's going on with the budget, and due to the fact that so much of the rest of the world is in a slowdown, a big slowdown, be it Europe, be it China, it's a slowdown. And via that slowdown, some people are looking for safe havens. Even the dollar, while it was down today, not a monster drop after a big rally in the U.S. dollar. So when we take a look at soybeans, obviously you can see the market's been correcting a bit now for a couple of weeks. So this was the peak of the market, and that finished at 925.25 on January 25th. Now here we are, February 11th, and the market has been getting a little bit of a correction, and I wouldn't be surprised if it continues to correct that the 18-week moving average of closes becomes something of a pivot that the market decides to play with. When we look at today's action, you have what's called an outside day down. That means you took out the previous day's high and low and closed lower on the day. It also sets up the potential, for me at least, that today's high should not be taken out on Tuesday or Wednesday, and if it is, it'd be a good sign, at least the way that I do charting, that the market is running into a support level. When we take a look at the swing line, you've got the pattern of lower highs, lower lows. That's bearish. Where was the support? The 18-day average of closes. And this is how you looked going home Friday. The market finished at 914.5. The close was 914. The 18-day average was 914.5. They were both at the same number. What the market did today is it went up, took out the highs of Friday, then it let go. That puts into play a couple of things. First off, resistance back at the 18-day average. Second of all, in terms of moving averages, the 100-day might become support at 900.25. And what I always look at is what? Where are the Bollinger Bands? And this time they're together. They're sitting here in the area of 900.25 to 905, and I would expect that Bollinger Band to rally a little bit. So I am not looking for a collapse in the markets. In fact, I'm looking for this area to be potential support. We'll see what happens. Should you be bearish or bullish here? Well, when we look at momentum, it got oversold on the close. Any reading under 30, I consider oversold. So I have a market that's pointing down. The bias is down. Momentum is down, but oversold. And I'm getting a support zone coming in from 905 to 900.25. In the meal market, you went down to the lower Bollinger Band, and for all purposes, you closed about 30 cents under it. So the market still has the pattern of lower highs, lower lows. Unlike soybeans, you converted the slow stochastic reading to what we call embedded or locked in. That occurs when you get at least 3 days in a row where the numbers are under 20. And you can see that that is in fact the case. In fact, it's more than that. So it's been embedded for a bit here. It's been trying to reach down to that lower band. It got there last Thursday off the USDA report, bounced back on Friday, and back down again today. The trend is down. 308.25. If you took that out, well, it's 308.20. I would say, all right, that's the end of this leg, maybe, of the downside if you lose the embedded reading. If not, just get a bounce in a market that's still very much internally bearish still. Soybean oil, you lost the embedded reading today. So when you lose an embedded reading, it happens when the market's been going sideways over, in this case, 80, and then one of the indicator legs comes out of 80 on a closing basis. Unless it rescues itself with a sharp up move immediately, tonight and tomorrow morning, the odds favor price and the 18-day average want to make a run at each other. In the corn market, you got down today to the lower Bollinger Band, and you closed just about on it. So we're down to a zone where support has been uncovered. We did this before. There's no reason to be bullish. This market has a higher high, lower low, but there's also, I have a lot of reasons not to be overly bearish right here, and that's because under a lower Bollinger Band, I don't think the odds favor being short. When you go to the wheat market, you can see that you went up, tried to poke through these upper Bollinger Bands, and then collapsed last week. You've got lower highs. With today's break, you've got a, if I'm correct, lower low. The support zone, the lower Bollinger Band, 510 and a fraction, and we finished 518, but we got as low as 512. So the market's trying to find its way into a support zone. Resistance is back at the 18-day average at 519 3/4, and if you cleared 522 1/4, you would leave this leg of the downtrend. In the sugar market, you are in a downtrend again, and I use the word again. The problem has been that when you get into these downtrends, you haven't had any follow-through. You come down, you're seeming to find support against the 100-day average, and today you did very similar. That 100-day average is 1269, and you're sitting right now at 1267, so I'll call that right by it. If you can get the follow-through, 1244, the lower Bollinger Band, is the support zone. But don't lose sight that you're in this area. Now, to break out of that, you're going to get ultimately overbought or oversold. But that's how it works. So who's in control? The bears. I think they'll even sell the market in between that 100-day and 18-day. But if you take out 1285, they'll probably throw their hands up and go, another one of these times where there's no follow-through one way or the other. In the coffee, you went down to the lower Bollinger Band. I haven't done that for a while. You'd have to go all the way back here into December to see that. However, and I'm going to stick it out again with the same thing, you're oversold, you're at the lower end of a Bollinger Band. One of these times you're going to follow through. And when you follow through, you stay oversold and the market works its way lower. I think that at the end of the day, a lot of the bears probably cut positions down because if you hit the upper Bollinger Band, that's the concept. And here you finish right at the lows of the day almost. So I think they did that as well. The low today, 99.85. You finished 120. Not too far off of that. We'll see what tomorrow holds. In the cocoa, you're still in a downtrend, but the cocoa can be full of surprises right here. If you take out 2242, what would happen is you'd have higher lows, then a higher high. You'd be over a combination of the 18 and the 100-day, and that can get the pop. So the bears have control going home, but they have divergence facing them. They've got momentum that turned up. The market, in theory, should hit that 18-day average when you lose an embedded reading, and if it gets a pop there, is this enough to potentially get it up to the upper Bollinger Band will be the question. In the cotton market, after last week's USDA and no trade deals, what you've had is lower lows, lower highs, lower lows, and on Friday, you were knocking on the door of the lower Bollinger Band. I'll say it again. I do think that's where shorts were being covered by some of the pros. You were oversold, you're there. Are you going to follow through? And to follow through, remember what I just said, typically, if you follow through the downside, you're already oversold, you get more oversold. That's what's going on right now. Do I think there's aggressive selling under the lower Bollinger Band? I don't think so, but you've caught a whole group of people right here. The trend is down, so on rallies back up in between the Bollinger Band and 18-day average, I would not be surprised to see people trying to come out. Because you're so oversold, I have my doubts that the bears will get overly aggressive. In the cattle market, we have a pattern of hitting upper Bollinger Bands and backing off from them. This is not the time to get bearish. I want to explain that. Momentum is up. The trend is up. You're at a zone where you might run into resistance, and support is back at 127.15. The bulls have control of this market. They're also trying to wrestle control from the bears and the feeder cattle, but haven't done it. What you have in the feeder is a pattern of lower highs and higher lows. That is not a trend. You've got bias up because you're over the 18-week average, and you have momentum up. We have to see where it goes. What bothers me in momentum, if the market keeps climbing, it'll be over that 70 reading, 1, 2, 3, and then it's overbought. In the hog market, you went down for a kiss of the lower Bollinger Band, and you got a spin on some short covering probably there. Probably a little too much overdone here. But again, what's going to keep this market going unless we get some demand from somewhere, and that's where that market's been having a problem. You know, I'm going to hold another one of my webinars this Thursday, February 14th. I love you all. It's Valentine's Day, right? So we're getting it for that day. Now, I've already sent out the invite. So if you're on my mailing list, you've got it. The webinar is free to come into live. When you do so, bring your questions, because that's what makes this work. So it's first come, first served. There is absolutely limited seating on it. It's an invitation only. If you did not get the invite, there's nowhere to sign up on our website. You've got to go right here. Give us a call. My staff will send you the invite out right now. It's going to be Thursday at 12:30 p.m. Central Standard Time. It typically lasts 30 to 45 minutes, and it's a lot of fun. I'm Ira Epstein. You have a good day.